Hey guys, welcome back. And today I'm going to be starting a new course, which is a short course in derivatives. I hope you would learn something out of this whole thing. So let's get started. The first thing which we'll be looking at is introduction to derivatives, obviously, and then the mechanics of the markets, participants therein, and what are options. Then we'll be moving into specifically the types of derivatives, which are like options, futures, and swaps. We already know it. The fourth thing in the introduction part is the determination of forward and future prices, interest rates, and interest rate futures. So this particular course is typically for people who trade on derivatives and students and generally who might want to get an idea of what derivatives are. So with respect to the background, you don't need any background here, just need to understand basic maths, and yes, you're good to go. So I've just talked about the part 1, which is introduction. Part 2, which is valuation, is under valuation we'll be looking at option valuation. Then so specifically Black-Scholes and binomial. It's very preliminary for someone who is aware of option valuation. And then option trading strategies, what are Greeks and its significance. Then value at risk, what is it and how it is measured and how is it useful. Then yes, here comes the interesting part. Why would you make losses while trading options? And that's the best thing about this course, because while I was thinking of doing this course, the motivation obviously comes from the fact that I've traded derivatives and lost a lot of money, and I've seen people losing money all the time, and then they would come back and talk about it, and it is kind of a by which mechanics by which they can make quick bucks, which is obviously not true. You have to understand it deeply, and you have to be very careful by trading derivatives, because it is one thing which is which is kind of make you or break you, and break you happens most of the times. So it is only when you trade for a very long period of time, over a period of time, then you understand how it works. But yes, just to give you a gist of what happens in the market and how the real world works, that is what the motivation is behind this course. So yes, we've talked about how would you make a loss while trading options. That's very obvious. And then the final thing in the part 2 would be how to make money while trading derivatives. Now here it's very tricky, how to make money while trading derivatives. It's a very strong statement, and you would obviously be interested about this and excited about this. Yeah, but let me tell you that this comes only after a lot of perseverance and getting in touch or staying in touch with the market. It just does not come overnight. I mean, if someone tells you that okay, how that's how you do it, this is the trading strategy, you buy this, buy this, and you sell it, and then you keep on doing it, that's not how things work. So it is really important for you to understand that markets are there, yes, and the participants will always be on the lookout of making money. So if everybody's thinking about making money, there is only very few people who would actually go ahead and make it. So I will just give you a gist of how you can maybe improve your trading and get a hands on how to make a little bit of money over a period of time, and then keep on honing that so that you get better at it. All right, so let's look at the third part of this, which is real world. Now I have seen people just reading about derivatives and the different trading strategies, and then they just go back, start trading on them, and then eventually making losses. So while it is imperative for you to understand and get an experience of how derivatives work in the real world, but at the same time you should be very wary of the fact that if you're getting into the derivatives trading, then you are bound to make losses. With this mindset, if you get into the market, then it becomes easier for you to stomach the losses which you make in the first or maybe second or maybe third trading sessions. So coming back to the third part, I just wanted to highlight a couple of live examples here. So I'll be talking about how the real world operates. So let's just look at the couple of examples which I have here. So the Lehman bankruptcy, SocGen's big losses in 2008. It's almost 10 years now, maybe more than that. No, I'm sorry, 12 years now. So the unanticipated delivery of a futures contract, LTCM's big losses, this was 97. Systemic risk, interest rate regime in India, FRAs, Key Kidapi Boy, and then systems error, Days count can be deceptive. It is interesting. This one is interesting. Yeah. The wildcard play, Hammersmith and Firm Story, Gucci's large dividend, tax planning using derivatives. This is interesting for people who want to, save taxes. But again, if you are a small time employee, if you have like very less amount of income, then this does not make sense. It is only for people who are like really making big bucks. This is what will help them. Alright, so then losing money with box spreads. Yes, obviously losing money is a big part of the game. You have to actually be very specific about losing. So if you can just cut down your losses, then you are actually at a profit. So that is what the whole mantra here is. Then making money trading straddles. Mutual fund returns can be misleading. Obviously they are most of the cases. What causes volatility? This is Indian context currently. The whole gamut of the things unfolding in the wake of this virus thing happening currently in India, which is like rocking markets on a daily basis, and the volatility of the VIX is at an all-time high, and this is causing a serious disruption in how markets work and operate. And I hope this gets better. So what causes volatility? It would be an interesting thing to see. Then again, from the employees or people who are working in corporates, from their standpoint, I've got this: warrants, employee stock options, and dilution. And then again, this is a fundamental questions, and this is again a fundamental question. Again, you will stock beat bonds in the long run. Dynamic hedging, again, was portfolio insurance to blame for the crash of 87? Making money from foreign currency options, not sure if this would be applicable to a lot of people, or maybe the individual investors. And then crashophobia, Black-Scholes, Merton, and Excel, how you can revalidate your answers or results. Then Siegel's paradox, Procter & Gamble's bizarre deal, and big losses by financial institutions. These two last inundations are very important, or these anecdotes will help you understand why big companies make big losses while trading derivatives. So typically big companies, when we talk about big companies, they don't trade derivatives to make money, they just trade derivatives for hedging purposes. But then again, some companies do it deliberately, and they have their own hedging desk, but then most of the times it's just the financial institutions and not non-financial institutions. So typically non-financial institutions would trade derivatives for hedging purposes. Alright guys, with this outline in mind, let's just start the whole thing here. I will follow this outline, so if you want, you can open this and go ahead. This will be available in the download section here, and you can download it and follow through. So sit back, relax. It's not very difficult. It's just a few things which you need to take care of while you're trading it, and I know most of you guys are already doing it, and you guys are very smart people. I've seen people doing things smartly, so I hope it would just reinforce what you already have in mind. So I hope this course will help the new guys, or maybe the students, and or maybe new traders. Alright, so see you in the next video.